PSG Asset Management prides itself on delivering investment excellence to its investors over the long term. And the Balanced Fund provides an excellent snapshot of all the capabilities coming together, combining both local and global assets in one solution. Joining me today is Justin Fleur, who's not only head of equities, but also one of the fund managers on the PSG Balanced Fund. Justin, when starting to look at any fund or considering it for investment in your portfolio, it's always good to familiarize yourself with its objectives. So maybe can you give us an overview of the PSG Balanced Fund and what it is trying to achieve?
Sure. Hi, Audrey. Nice to be with you today. So our Balanced Fund is in the ASISA High Equity category. So it's the largest category of unit trusts out there. And it really plays a role in the client accumulation journey primarily. So what I mean by that is it's Regulation 28 constrained. And our clients typically use it for retirement planning and for capital growth. So because it's a high equity fund, it tends to run with more growth assets, so equities and property, both local and global, through the cycle. And it aims to deliver CPI plus 5 after fees over the appropriate time horizon. It's normally good for clients who are looking for capital growth with a time horizon of 5 years plus, is normally what we would say. The other thing to say about it is it's really where all our asset allocation capabilities come together. So it has a global equity component, it has a local equity component, it has a fixed income component. And we really bring that through. We optimize for the best possible portfolio opportunity set, combining those different capabilities in order to meet those objectives. The other thing to say is that because we construct our portfolios quite differently from other people, a lot of our clients get good results by using our fund as a diversifier in their solutions. So they'll blend our fund with some of their other balanced funds out there. And they typically get very good results because our fund is a lot less correlated with the general balanced fund out there.
So Justin, looking at the PSG Balanced Fund, it's got a proud track record, and it's actually delivered alpha of 2% since inception in 1996 and about 2.5% alpha over the last 10 years. Now, a track record like that doesn't happen by accident. So talk us through your process and how it all fits together, how it comes together with the PSG asset management philosophy to deliver these kind of returns to clients in the long run.
Oh, thank you, Audrey. So I think what I would say to answer that question, one is it takes a lot of thought to set up an asset manager company that can deliver this type of performance over long periods of time. So we're very proud of this track record. And I think obviously the performance more recently has also been exceptionally strong. There's a few ingredients in that that I'll point to. I mean, one is, I think, very, very good fundamental research and an investment philosophy that is very unemotional and really tries to identify undervalued and unpopular securities that will have better prospects in the future than the market is giving it credit for. I think that's a unifying concept that applies across all our capabilities, so global equities, local equities, and fixed income. So I think that's an important ingredient. I think also having a culture of open-mindedness and of being willing to learn and improve all the time has also added huge value over that time period. You kind of think of coming through COVID, the COVID period, for example, the team, we learned a lot of really powerful things that I think really put us in good stead, and we really benefited from that over the last, call it 3 to 4 years now. So I think that's an important point. The last thing I'll say is it's really gratifying to me that it's been a function of really good performance across all the key capabilities. So it's really showcased our integrated portfolio management approach that we bring to our clients. And specifically, I want to touch on our global investment capability. So this fund has delivered really good performance relative to global benchmarks over the last 10 years and longer, despite it being quite a tough time for stock pickers, especially in global markets. So it's been really gratifying to see is that our integrated global process that we've been doing since 2008 really is adding value to our clients in this fund and in our other multi-asset funds as well.
So Justin, you mentioned that you've had strong performance recently, but looking ahead, are there still any opportunities left for investors?
Oh, thanks, Audrey. So I think what I'll say is if you look at the main building blocks of the fund, the main asset capabilities that are inside the fund, all three of them look really, really good right now. So local equities, we've actually been increasing exposure to over the last year, taking advantage of some of the low prices that we're seeing in our market. We think that could deliver really good outcomes for investors. We have an integrated global process, and a lot of our global stock picks that we're identifying and our global ideas also looking fantastic here. Really well priced with good growth prospects, and they sit very nicely alongside our South African assets. So you're getting very nice diversified blend in an integrated portfolio. And then our fixed income component has been doing really nicely over the last 5 and more years. And that's also looking really good with high yields on offer across a range of securities, including global credit, inflation-linked bonds, and local cash and nominal bonds. So it's on that basis, I'm quite excited about the long-term prospects of the fund, especially over the right time horizon. And yeah, we look forward to the future with confidence.
Justin, thank you so much for taking the time to talk to me today.
Thanks, Audrey.